All right, traders, I'm back with part two of our back testing session. Still back testing Nasdaq, and hope you guys enjoyed the first part, right? So, without wasting any time, let's get straight into it. All right, traders, hope you guys are good. And in our previous session, I said that I don't think trading on Nasdaq, the daily, like starting from the daily, will work. And so, what I've decided is I'm going to change my time frames. So I'm going to use the 4-hour as my main time frame. I'm going to use the 1 hour as my intermediate time frame and the 30-minute chart as my entry time frame. So I'm only going to be using the daily to determine my trend. But then as far as determining supply and demand curves and zones, I'm going to go to the 4-hour. Reason why I'm not looking for zones on the daily is because if you look at this chart right here, there are not a lot of imbalances on the daily, right? And for me, imbalances is it's a crucial part of the way I trade, right? So anyways, let's start by identifying the trend. I'm going to use a line chart. And as you can see right here, we have this low over here, high taken out, have this low over here, and then high taken out, and then now we have this new high, right? What you will notice is that you have structures, you have major highs and major lows, and then you have internal structures, right? So you need to be able to differentiate between the two in order for you to be able to trend with higher probabilities. So like I said in the previous session, the main trend the general trend of Nasdaq is an uptrend, right? So over a prolonged period, we expect Nasdaq to go towards the upside. Meaning, if you see a sell opportunity, you're not supposed to hold for long. Whereas if you see a good enough buy opportunity, especially if within the range is in the lower part of the range, then you can hold for a prolonged period, right? So let me just refine this, and then we can go to the 4-hour. All right. So one other thing that I forgot to mention, as I was looking at my previous session, I analyzed my first loss, right? And what I noticed was I took a trade on a zone that was invalid. So in this session, I'm going to try not to do that, right? Remember, when you have a supply and demand zone, there are two important components that will help you determine whether a zone is valid or whether you should be trading on that zone in the first place. The first component is the imbalance. Without an imbalance, you do not have a zone. The second one is the basing candlesticks. Now, you can find trading opportunities on zones that have basing candlesticks that are not necessarily ideal, right? But you have to have an imbalance in order for you to be trading from that zone. So right here, we have liquidity, right, in a form of equal lows. And this is our daily low. It's a weak low because it hasn't broken through an opposing structure on the daily, right? On the smaller time frame, it's a source of liquidity because we have equal lows. Now, let's start. We have this range over here. Now, when we're looking at the supply and demand curve, we can see that we are in the seller's territory, but we're in an uptrend, making our supply zone a low probability. So what we're waiting for is for the supply zone to be in control. And if the supply zone is in control, then on a lower time frame, we're waiting for a break of structure, right? But remember, this is a low probability trade because we're in a long-term uptrend, right? So we have an imbalance here that the market is now filling, right? So the source of that imbalance is here, right? So this is our first zone, right? Now, if the market was to drop, right, we will take profits at our area of liquidity. We have our first area of liquidity here, and this is our equal lows. And beneath that area of liquidity, we have an imbalance over here. So we have a zone over here, which is high probability if you take into account the supply and demand curve and where, like, and also the higher time frame trend. So if we were to buy, we will find a high probability trade from the zone, right? So eventually I'm expecting buys from the zone, unless the market breaks through this high, right? Now let's go to the 1 hour. On the 1 hour, we have this low over here where I expect the market to break through if the supply zone is retested, right? If we're looking for nested zones, we have a zone over here. Now, the riskier approach is for us to trade a retest. But remember, this is not in line with the main trend. So we are not going to be selling immediately. We're going to wait for a break of structure, right? As you can see, we've had that retest on that zone. The market has incentive to go higher in order to fill in this gap over here. There's still an unfilled fair value gap right here. And the zone above is much stronger than this one over here. So the market has incentive to push higher. All right. So as you can see, we've had a liquidity sweep right here. And then the market retested our zone, right? And then this low over here was supposed to push prices higher, but the market failed. So as a result, we had a failure swing. And that failure swing also resulted in a break of structure. And we have a reason now to take a trade. Although, remember, it's not a high probability trade. If I was trading this in a real life situation, I wasn't going to use high lot sizes because it's a riskier setup. There is a chance that the market will push higher, right? So we have a small fair value gap right here, and the market has incentive to fill in that and then move towards the upside. We are going to take partials at this equal low here, because there's a chance that the market will not necessarily go all the way to the downside, right? So we'll take partials there. And then TP2 is here. All right, so let's move on to the 30-minute to get a refined entry. So on the 30-minute, I'm going to be looking for my sell from this zone over here because we have an imbalance. So first trade, we're looking at 1:6. Second one, we're looking at 1:11. We have a fair value gap right here. So there is a chance that the market might not necessarily go all the way down because we have the source of a fair value gap being here. But if we look at the basic candlestick of that source, it's not a high probability base. We also have another fair value gap right here. And we have a break of structure over here. So the market might not go all the way down. The market might not go all the way down. So I'm leaving my take profit there, right? Let's go back to the 4 hour and see. Remember, when we are trading on the smaller time frames, when we are trading Nasdaq, sell opportunities, you're not supposed to hold long because in the long run, it's going to, let me move my stop loss to break even. In the long run, it's going to buy. So you shouldn't hold your sell positions for too long. Wait. We have a zone over here. The market retested it, but as you can see, it's playing too much on that zone. So actually, we were supposed to take profit here, but yeah, I think in a real life situation, I would have closed this position. But let's see what happens because the market is playing too much on that zone. Let's see what happens. All right, so we hit our take profit. Okay. So the market would have hit our TP2 also. So I wasn't wrong. I was just conservative. Okay, fine. The market took liquidity from these equal lows over here. So we're good. And it's now come to fill in this gap over here. We have a zone here. So what I'm waiting for, or what I'm looking for in the smaller time frame, is a change of sentiment, right? Preferably a break above this high, right? As you can see, the market has now swept liquidity from this. We can take a trade, but like last time I traded this kind of setup, it moved me. So now I'm being a little bit conservative, right? If we look towards the left, I'm looking for zones to be trading from. So we have an imbalance here, but we have a zone nested on it, right? So if I was to take this trade, I'd place my stop loss on this, but the market, did it break it? No, it didn't break it. So it's still valid. Oh, it broke it. Okay, so it broke it. We have a fair value gap here. So it means I will trade from this right here. Right, so I'm expecting the market to fill in that fair value gap. So never mind about this trade. I'll place a limit order here. And then where am I placing take profits? It's a buy, right? It's a buy setup on the lower end of the supply and demand curve. Do I expect the market to go down even further? Yes. Why? Because we have that daily low as an area of liquidity. And we also have liquidity here in the form of equal lows. So the market has incentive to take out this daily low liquidity and move towards the downside before going up, right? I don't know if I should take the trade. Towards the upside, the only incentive that I'm seeing is a fair value gap right here. Now, if we're looking at how the market went into the zone, I can say, not confidently though, that it is an induction. But where am I going to take profit? If we do get a setup, I'm going to take profit here. But remember, I'm waiting for a breakout above this high over here. Remember? All right. Remember what I said? It was not a buy opportunity immediately, right? The market has incentive to take out this low over here before going up. So this is the much more riskier approach, but a conservative approach is to wait for a break above a high. All right. So we got that break above that high. And then this is where I'm placing my trade. And then we have a fair value gap right here. So if we go to the 30-minute, because I have to refine this entry, we have
the fair value gap that the market is trying to fill. Of course, we have equal lows here, so I can only take a trade from this zone over here, which has already been tested twice, making it a low probability zone. So this one right here, right? It has multiple basing candlesticks, not making it an ideal zone, right? We have a change of character. So I don't know. Let's see. I feel like the trade's gonna leave me, but also we have liquidity here. So the market has incentive to take out this area of liquidity before shooting up. So we're now in profit. Like I said, Nasdaq has its own unique way of behaving, which is not necessarily identical, or it's not like how I'm used to trading with currencies. Okay, today we're in a better streak, but I don't want to be overconfident. We have this zone over here. This is the third retest, so it's definitely gonna break it. Third retest, low probability. So let's move on to the higher time frames. So far, I don't have a entry strategy on Nasdaq. I only have a stop loss strategy because it's the same method I use on currencies. But like the way I enter trades on currencies, I use limit orders. So I think I have to find another software from which I can backtest my entries. So if you have any suggestions on the platforms I can use, please comment and I'll check it out and probably use it in our next session, right? So we have this right here, still a valid zone. The market took liquidity or broken structure. So either two things can happen. Either the market will reverse or break this high. But right here, we have liquidity being taken, right? Meaning on the lower time frame, we're supposed to wait for a change in sentiment. And then if we get that change of sentiment, yeah, so the market has been dropping. Oh, have equal lows over here. So we're waiting for the market to break this. The market breaks that, then we are selling. Yeah, all right. Now let's identify zones now. All right. Going towards the upside, you can see there is no area of liquidity. There is no fair value gap. So if I catch a trade, I'm taking profits at the opposing higher time frame zone, which is this right here. We have a break of structure. We have an imbalance over here. The only place where I see a valid entry opportunity is here. But it's a high risk. It's a high risk trade because I don't see a trade anywhere else. If we go to the higher time frame, the 1 hour, there is no other zone. This zone right here has too many wicky candlesticks, so the base alone disqualifies it. We don't have an imbalance going towards the upside, so let's see. So okay, it's fine. It's fine. It's fine. On the 4 hour, how does it look? We have no imbalance, so let's wait for the market to either reach this or break towards the upside. All right, so on the 4-hour, we recently got a break from that daily high. Now I can go back to the daily to consult. Okay, this new high now has been taken out. Do we have a fair value gap? Yeah, we do. I see two. I see huge one here, but I doubt the market will come back to retest it. And I see another small one here. Then we have this right here as a source of liquidity. Liquidity in the sense that it's low in an internal structure, right? This is still our daily low. What did I do here? So yeah, we'll wait and see. This right here has been taken out, so the market has to print what you call a pullback. Go up. All right. We can go back to the 4-hour now. We have a zone here. And then we have an imbalance also here. We have liquidity here in the form of equal lows. And then we have an imbalance here, right? And then we have the zone over here. Now, if the market retests this zone, which is risky, right? On the lower time frame, we need to see what you call this, a change of sentiment in order for us to take this out. If we do get that change of sentiment, I'm gonna take profit at my nearest area of liquidity, right? I don't think the market is gonna drop. I think there's incentive for price to push higher. Let's just see. All right, so the market's retesting. What are we looking for on the lower time frame? A change of sentiment. Low probability because long run, we are buying. All right. See what I mean? Price is going up. So I was supposed to capitalize here. Right, it's fine. It's gonna push higher. Have a fair value gap here. And then we have a fair value gap right here. We have a zone over here. Now, the zone does not have to adhere to all of the rules that we use to trade zones, purely because it's printed on a record high. And then we have this imbalance over here. I mean, this zone over here, not necessarily nested within the zone. Then we have another one here. So the market can move from either zones. So we can either buy here, and then let's do the same thing here. Minus to 6. All right. I'm still not satisfied with the way it moves, because especially when it's making these record highs. Okay, we have an imbalance here. I'm well aware that it's not making like record highs every month. So this was taken last year. There's going to be a time where it starts dropping, right? We have a fair value gap here and a zone starts. We can go to the lower time frame to get a refined entry. 1:3, 1:6. So it makes sense in context why prices were going up on a regular basis. But I think we need to backtest Nasdaq in a market condition that is either ranging or, fuck me, first loss. either ranging or crashing. What's going on here? This drop was too strong. The market filled in that gap, but it hasn't violated any major structures, so could be going for discounted zones before it shoots up. So let's see. Exactly what I said. So got our first loser. All right, so let me do this just so we have a clean setup. All right, using the zone to cover up what you call this, fair value gaps, and then this is our high. So that's where we're going to take profit. We go to the 1 hour. We have a fair value gap nested. The market has incentive to take out this liquidity over here, so we can place limit order here. The zone is a low probability zone because it's located near liquidity. We weren't gonna catch that. Okay, I can buy here. Why am I saying I can buy here? Because we have a failure swing and a change of sentiment here.
All right, so that's where we're going to end it for today's session. Hope you guys enjoyed it, and stay tuned for our third session. And this is our last backtesting session on Nasdaq. And in that session, I'll tell you, or I'll give you guys a list of the things that I have learned from this backtesting session, because I have taken notes. So I'll share them with you guys, and hopefully it will help you guys to trade Nasdaq more accurately. So thank you guys for watching, and again, I'll see you guys in the next video.